Yeah, morning, Trace. Obviously, a massive week in terms of the data deluge and also the event risk coming forward. We've just seen the US CPI prints coming out. We talk about those in a second, but we are expecting Asia to open on a fairly sanguine note, probably a little bit about performance from the Nikkei. We saw the ASX 200 close at 10 past 4 with the SPY futures at the time trading 72.47. That's exactly where they are right now. So one suspects we're going to see SPY futures or the ASX 200 when it unwinds a little bit later on a very flat note as well. Now, the leads we've got are quite inspiring. They're quite positive. So one suspects that when Asia gets underway, we may see a little bit of buying from the get-go. We obviously have to see how China trades. European equity markets, though, we were watching the DAX and the CAC to see if we can cement this all-time high close. They've been very, very strong of late. But as you've seen in the daily charts, there's been a bit of indecision to push this one higher. Where we haven't seen necessarily the indecision, and it clearly reconciled itself later in the session, was in the Nasdaq. The Nasdaq has just been in beast mode today. It's up 0.8 on the close. And it's been a very strong tape towards the back end of the day. S&P as well closing high, about 0.5% higher. And actually, have you look at the sectors, we've obviously got tech working very nicely. Financials have pushed higher. If you've seen that daily chart of the XLF, if you want to trade this through ETFs, working quite nicely. It's been very strong of late. And you've seen a nice move up in materials as well. But 60% of stocks are higher, so reasonable breadth playing through. Where we've seen the underperformance, though, has been in the energy stocks, and the energy sector's down 1.4%. Now, that's not going to surprise if you have a look at the intraday tape of what we've been seeing in WTI crude or Brent crude. It's been very heavy, certainly going into European trade. The door sort of got pulled open and price moved sharply to the downside, and we saw sellers really taking that one down. We've got a move over 3% in both both WTI and Brent at the moment. And also natural gas is getting pretty badly beaten up. We're down about 6%, or nearly 6% at the moment. I think some of the reasons people are talking about crude is that Russian exports have coming out, their figures showing that they've increased to the highest level since July, and also a government agency in the US saying they're looking to increase output by about 30,000 barrels a day going forward. So maybe that's the reason. Maybe people are looking at demand, but certainly a very heavy tape playing through there. We've obviously seen a lot of vol sellers playing through as well. The VIX for most of the session was trading sub 12%. We're just around those levels at the moment. But I don't think it's going to surprise anyone that everyone's looking to sell vol in equity markets as they are in FX at the moment, when you've got 20-day realised volatility in the S&P trading at 5.8%. So implied's not going to get off the ground until we get a situation where realised moves up a little bit higher in that situation as well. Now, in terms of rates, in terms of the front end, we've seen a little bit of selling coming through. We've seen twos up a couple of basis points. If we have a look at the intraday move there, obviously a bit of a whippy ride playing through when we got that CPI print in the US. We saw core CPI on a month-on-month basis coming out at 0.285%. There and thereabouts, the market was looking for 0.3 of 1%, headline at 0.1 of 1%. Now, if we go into the internals, core services increased 0.47 of 1%. That was driven by owners equivalent rents and rents as well. And core goods were down 0.3 of 1%. I think the number everyone was watching were core goods ex rents, which actually increased on a month-on-month basis from 0.22 of 1% in the prior read to 0.44. Now, I don't think this is going to trouble the Federal Reserve in any great capacity. We'll obviously have to see what happens a little bit later on there. Now, in terms of FX markets, the dollar's down about 0.2 of 1% at the moment. I think if you look at that on a Dixie basis, obviously that's been driven by a slightly stronger euro, although it did trade up to 108.22 and came back a little bit there. But if we have a look at the performance on the days, and obviously people looking to be sort of drawn to where the strength has been, the South African rand's been the better performer there. We've seen the Chilean peso also working quite well as the Mexican peso. So carry working quite nicely on the day. Brazilian real, we've got the Colombian peso and also the Australian dollar at the bottom of the pole there as well. Now, as we have a look at the session that will be, obviously everyone's going to be sort of focused on rates markets. Everyone's going to be focused on the Fed meeting. Will Jerome Powell lay an explicit path towards easing? That's something that the FT is suggesting that he's getting pressure to do. We are going to get new economic projections. I think we see GDP and core PCE and unemployment massaged by basis point here or there, but it's going to be very, very small. I think where the big conjecture is the dots. Do we get the dots being taken down to 4.875%? Or does it come down to 4.6? So obviously that's implying 2 cuts or 3 cuts going forward. Now, given what we're seeing in the rates market at the moment, as you can see here, we've got 11 basis points of cuts being priced by March. We've got a full cut being priced in the May meeting. We've got 110 basis points of cuts being priced by December, 4.4 cuts. Essentially, I think those dots could matter in terms of the price, and the market's got very much ahead of itself there. And also, yeah, will that language from Powell in the press conference meet that market pricing? I think it's going to be very hard to outdove this market. So good to see a bit of volatility on the back of that one. Yeah, the risks, in my opinion, are pretty much to the hawkish side.